left my heart in an earnings report. Somewhere between the lines they chose to distort. She said, "You're not a boyfriend, you're a bad investment." Filed our love under mutual resentment. I text her in limit orders and prayer, while my mental health trades thin and thin air. Every maybe felt like a bullish breakout, till she ghosted me mid-intraday fake out. Now our romance, red candles like they're old flames, sing lullabies till every shame. I fell in love in a liquidity trap. She held my hand through a volatility snap. Now I'm margin called by every kiss, in debt to moments I still miss. We slow dance through the Fed's recession, swore commitment like a mispriced option. I keep longing for like a long apple, knowing damn well it's straight irrational. We made out to market close, in the backseat of a Prius full of IOUs and clothes. She said, "You're too obsessed with your net worth." I said, "Babe, I only bleed green on the first and third." I wrote poetry on napkins from my broker's lobby, paid in overdraft fees and emotional robbery. She liked her love like she liked her stocks, low exposure and far from toxic. Now I trade regret in after hours, use the pain as passive income power. I fell in love in a liquidity trap. She held my hand through a volatility snap. Now I'm margin called by every kiss, in debt to moments I still miss. We slow dance through the Fed's recession, swore commitment like a mispriced option. I keep longing for her like a long apple, knowing damn well it's straight irrational. If love's a bull run, I bought the top. If trust is compounding, I overdrew nonstop. She was a Monday morning market hawk, and I was the guy still clicking by like it's her fault. I fell in love in a liquidity trap. She held my hand through a volatility snap. Now I'm margin called by every kiss, in debt to moments I still miss. We slow dance through the Fed's recession, swore commitment like a mispriced option. I keep longing for like a long apple, knowing damn well it's straight irrational.
Oh, brother, oh, brother, oh, brother. Welcome back to another episode of the Matt Kohrs Show, where it is the day after. I hope you were able to survive the Fed interest rate decision, the FOMC holiday, the final one of the year, where if you missed it, there was a lot of chaos in the market. We went up, sold off a little bit into close, and the overnight session really sold off because of Oracle's earnings. I'll talk about that. But if you were trading it like intraday and you kicked it to the long side, you probably made a couple shekels or two. So obviously a massive congrats to you. This morning, I'll be breaking it all down. I'll be explaining what happened yesterday, not in terms of just the interest rate decision, a little bit of the earnings, but overall, I'm going to pitch to you my opinion, my idea, my prediction that because of all these events we just had, I think we're going to see that slow bullish grind up until basically the end of the year. And really, I think the S&P 500, SPX, will be hitting a new all-time high, which the current all-time high is like 6,900 and like 20, 21 721, something like that. I'm actually thinking that we're going to go all the way up to 7,000 plus. So I'll be breaking that down. I'll be explaining that. That's going to be kind of a higher level, more holistic type of a situation. Of course, I'll be getting into the nitty gritty of what to pay attention to today. The major thing already happened. We had initial jobless claims a mere 35 minutes ago. The market dropped a little bit, but overall, we're still recovering after that overnight sell-off. So the bulls have returned to the party. So that's obviously a good thing. So we're going to be chit-chatting about that, of course. I do have some individual equity news in terms of Broadcom, AVGO. They are reporting after the market closes today. So that's some of more of like the nuance information we're going to be getting into. But really, the name of the plan is the name of the game today. The plan of the day is to review everything that just happened. And then, of course, kind of get into the nitty gritty of today, specifically the key levels, looking at the positioning. But really, the story goes like this. There's quite a bit of negative gamma above and below. So that means we can really move. But then when you consider the fact that vol is starting to die off and we're not seeing that many people get into puts, it tells me after all these big events, people aren't that interested in buying protection, as in the lack of bearishness is actually a little bit bullish. And as vol continues to die, I'll be looking for that grind to the upside. Now, does that mean it's going to happen right out of the gate? Does that mean it's going to happen today? Does that mean it's going to happen this week? I don't know. Your guess is as good as mine. But of course, we have to take in new information as it comes. But overall, the situation, I wouldn't say it's the most bullish I've ever been, but it's whatever the level above cautiously bullish is. I would say I am comfortably bullish right now for obviously really the remainder of the month and even potentially into the start of January. So I'll be kind of explaining that concept to you of how I see things going on, not going on, all that good jazz. But hey, I hope you had a great day yesterday. If you chose to trade, I hope you made a bunch of money. If you chose to sit on your hands, hey, I hope you enjoyed sitting on your hands. And then that leads us to today, a beautiful Thursday, December the 11th, I want to say. I'm pretty sure it's the 11th. I'm like 80% confident that it is the 11th. Maybe. I don't know. Whatever. For all of you who believe in the Gregorian calendar, I'm sure you'd be able to tell me about it, but let me do my job and see what's going on in the market today. What is this? Disney making $1 billion investment in OpenAI will allow characters on Sora AI video generator. Okay, so I mean, I guess OpenAI is continuing to make partnerships with literally everyone you could possibly think of. So anyway, headlines as of this morning: S&P 500 Nasdaq futures fall as Oracle results fail to stoke AI trade. So Oracle completely missed on Wall Street expectations, and the sell-off was more dramatic than probably you anticipated because so many people were punting long. So when the boat is way too overfull on one side and they get it wrong, this is the type of situation you have. So overall market, when we closed yesterday, we were only 0.46% away from an all-time high in the S&P 500. So obviously we hit the all-time high at the end of October, specifically October 29th, sold off, fake out breakdown, recovered, started to grind. We had a strong recovery followed by more of a grindy recovery. And right now we have that all-time high. And I do want to remind you, yes, there is still this downside gap fill to 6,776. And of course, if we get some crazy news and the AI trade starts to break apart, yeah, maybe we want to watch that. But for right now, if I were a betting man, which I am, I think it's more likely that we take out 6,920, the all-time high, before we get this downside gap fill at 6,776. But once again, that's just a prediction, and we all have opinions on this type of stuff. Turning it over to the Nasdaq, very similar structure. We popped, we pulled back, fake out breakdown, strong recovery, grindy recovery. In terms of NDX, what's even more interesting today is there's actually a very close upside gap fill. Yes, there's still this downside gap fill pretty much at that 50 EMA, the daily 50 EMA. But with respect to the upside gap fill, as of the close yesterday, only 0.4% away, and with respect to the all-time high, about 1.5%. So I believe that it is a very good statistical chance that we hit new all-time highs between now and the end of the year, maybe just exactly at the start of, we'll call it January. Bitcoin still showing a little bit of weakness, trying to get that grind up, but obviously relative to the equities market, it is underperforming. You can kind of see the difference there, but at least it's holding 90,000. So that's kind of the overall picture. Obviously, as many people are rightfully talking about this morning, Oracle, a bit of craziness. You can see yesterday it closed at 223. Currently this morning it is trading at 193. It is down 13%, just missed on earnings. And like I said, way too many people were way too optimistic. And it was kind of like a monolithic bet of let's just punt calls. And then when everyone's wrong on calls, this is kind of what happens. And that's exactly why in the overnight session, we did see some craziness. Let me show you ES here. You can see that we closed, dipped all the way down. We actually took out the lows from yesterday, but then early this morning, we're already seeing a strong recovery. Same thing in the NASDAQ. This is all pretty much because of Oracle and people freaking out of the AI trade. But then you can see we got some stability around midnight last night, and we are currently bouncing off of that. So anyway, we were looking good. Overnight session was crazy. This is what happens when you have negative gamma. Too many people all have the same bet, and then all of a sudden this morning, people are coming back to calming down and I guess returning to earth, returning to reality. So that's a lot of the major, just like quick TLDR of what's going on today. Now to get into more of the details, we need to take a step back to yesterday. At 2 p.m., we got the Fed interest rate decision. We also got the SEP, and then at 2:30, Jerome Powell, the chairman of the Fed, was speaking. I need to review all of this for you just because it's kind of my major thesis of why I think we're seeing new all-time highs between now and pretty much January. But with respect to today, I just want you to know, it says noon, but generally these bond auctions come out at 1, so I'm a little bit confused about that. 10-year note auction Tuesday, right here, 13 o'clock, aka 1 p.m. Today, I don't know if this is a misprint or what's going on, but generally bond auctions are at 1 p.m. So I just want to call that out just in case you're watching the bond market. You might also want to pay attention at noon. I just thought that was a little bit odd. But anyway, coming back to the major thing. At 2 p.m. Eastern yesterday, we got this big announcement right here where my mouse is that yes, in fact, we got a 25 bips rate cut. The Fed fund rate dropped by 0.25% right here, 0.25%. So okay, cool. This was expected. We looked at call sheet, we looked at Polymarket, we looked at the CME watch tool. Everyone kind of knew that was going on. But what really moved the market higher was the whole host of things that came out also at that time and pretty much right after. Oh, fuck. Hang on, I'm in a trade already this morning, and I should probably set this to break even while we're talking. All right, yeah, as you can see, I'm in a trade. I'm long at 51. I tried to take this long here at 821. I was trying to get out at 700 flat before the 8:30 announcement. As you can see, I got clocked at the 8:30 announcement. It wicked me out. So then I waited. I saw this first higher low. Basically, we bled. We started to bounce. We took out the high, saw the higher low, went long. I was initially risking, I don't know, somewhere in here, but whatever. Now it's a freebie play. So yeah, yell at me. I'm trading before the market opens. Whatever. You're not my mom. You can't ground me. I don't care. Am I breaking a rule? Yeah, but whatever. I've now saved myself by, I suppose, getting into break even. So whatever. Sue me, ground me. You can't make me do anything. You're not my mom. Anyway, we did get a 25 bips rate cut. Awesome, great. That was as expected. But then this is where things got interesting. Right here, this red line. Can you guys see this properly? Yes, you can. The committee judges that reserve balances have declined to ample levels and will initiate purchases of short-term treasury securities as needed to maintain an ample supply of reserves on an ongoing basis. They're not going to call it quantitative easing, but it's, as they were talking about yesterday, I believe on CNBC and Bloomberg, it's basically quantitative easing's like little brother. It's as close as you can get to quantitative easing without calling it. And most people paying attention to the markets are going to straight up call this quantitative easing. This is a pretty dovish pivot. We know before this, we were leaning hawkish with quantitative tightening. We knew that would be ending this month. And we kind of thought that maybe the vehicle of the Fed would get stuck in neutral. No. Now they're actually going from reverse to neutral, straight into drive. They're just not going into drive at a high velocity. So this was like kind of the first thing that the market was like, whoa, okay. And that's exactly why at 2 p.m., not only with the 25 bips rate cut, but basically borderline quantitative easing that we all came in and said, okay, that's kind of because it's dovish in the current backdrop of the economy and monetary policy, it was perceived to obviously be bullish. And that's why the market went up. But then things got a little bit more interesting because there was a lot of information to dive into. Silent dissents reveal growing Fed resistance to Powell's cuts. One rule of the day is we are not saying the word dissent. It is my trigger word. If you watched the stream yesterday, you know I had money betting on the word Powell, on the event of Powell saying the word dissent. And Kobe, I believe of the New York Times, dude, she hit him with a question directly about dissent. Then she hit him with a follow-up question directly about dissent. And for the love of God, this guy, Jerome Powell, just refused to say it. He refused to say the word dissent, and it was a dagger to the heart. It was a dagger to the heart. So obviously for today's show and probably for the coming weeks, that's going to be my trigger word. I'm still very, very upset about it. But anyway, we actually had 3 dissenting votes, as in out of all the voting Fed members, they all have an equal vote, equal weighted vote. We had 3 of them that said, I see something different. So when you hear this silent dissent, it came out also at 2 p.m. in the summary of economic projections. So 2 things I want to go over here. Not only the silent one, but actually this is part of my reason of why into the conclusion of this month and the start of next month, things are going to be bullish. So we can see where we were at in terms of September. And when I say we, I mean the voting FOMC members for GDP. For the year 2026, in September, they thought it was going to be 1.8 as in positive growth. Well, now they've upped it to 2.3. Great. Unemployment, 4.4 to 4.4. Great. Unemployment staying the same. Of course, maybe you want it to improve, but at least it's not getting worse. Inflation, they thought it was going to be 2.6. They now think it's going to drop to 2.4. So we're in this situation where they're thinking in the year 2026, over the past couple months, last time we talked was September, obviously now fast forward to December, they think GDP is going to grow, unemployment is going to stay the same at a very low level of 4.4, and they think inflation is going to drop. That is awesome. And also core inflation. And then they think this is where it got a little bit weird, was where they think that the Fed rate's going to go. And then this was quote unquote the silent dissent. And you could see this right here in the dot plot where you have mirroring all the way down here. Remember, we're currently at 3.5%. So some people think we're going to get an interest rate increase. Some think we're going to be consistent. Some think we're going to get 1 cut, others 2. And then there's this grouping of 3 that think we're really going to get cuts. And I would say these are legit votes. I would say this guy's just being puppeted by Trump. This one, to me, this dot is a particular throwaway dot. But anyway, it's these bottom 3 that is the quote unquote silent dissent. So the market started to go into that and they're like, okay, like maybe that's just extremely dovish. So maybe that is going to be good for equities. But it brought us to this situation if this page ever loads. Fed's fractured vote signals trouble ahead for future rate cuts. So this is the one thing that people try to pick up on. Trump wants lower rates and a new Fed chair. Wednesday's division suggests one won't guarantee the other. So all of a sudden, now that we're December, throw it out the window. Now we're looking ahead to the January FOMC meeting, the Fed maintains rate 84% chance. As of this moment, looking at just the event market of call sheet, poly market, and even the bond market, everyone's saying, the new bar is kind of actually high for us to get this next rate cut. So maybe we're not getting one in January. So obviously that's just for the next FOMC meeting. In a normal year without emergency meetings, there is 8, count them up. There's 8 FOMC meetings. It's not every month. It's basically 2/3 of the year. But anyway, for the January meeting, 84% chance that we stay at the current rate. And then people started to say, okay, well, if that's what's going on with January, what's happening forward? Fed still forecasts just 1 rate cut for the next year. You can actually break this math down. And I know this maybe at first is a little bit confusing, but we're basically looking right here. Here's all for 2026. The odds are, it is kind of slightly favoring just 1 rate cut, but they're pretty equivalent of like 1 or 2. So this is the question right now. In the year 2026, based on the current odds, what the market is telling us, when I say the market, I refer to the bond market and what's going on with yields, not just in the US, but also globally. We're looking at this situation of 1 or 2 rate cuts. This was a little bit of a hit. People were anticipating a bit more of like, 2 guaranteed. Maybe we're going to get 3. And obviously we have some voting Fed members that very much want that. But looking at the situation of what the market's telling us, the odds right now are just 1, but they are pretty close to 2. So I'll say it's anywhere between 1 and 2. But that's how quickly things kind of shifted yesterday between the SEP and also Jerome Powell talking, where he made it clear that, yes, we're getting this rate cut, but to get additional rate cuts, the bar is kind of getting raised now. So I just wanted to put that out there. I'm not saying it is necessarily the right or the wrong move. I think we need more information to tell that. But overall, this is what the market is currently presenting us. Why is Wall Street Journal taking forever? This was one of the biggest surprises that we saw in the speech yesterday. Fed Chair Jerome Powell says U.S. may be drastically overstating job numbers. The country would be losing 20,000 jobs a month, Powell said, a concern that was part of the decision to cut interest rates. This was probably not the biggest surprise, but it was definitely a top 3 surprise. Powell explains why the Fed cut rather than waiting until January. So we kind of knew it was roughly in this time, but why now? Why not January? And it took a lot of people by surprise. We were talking about it live when it happened. It was kind of a shocker. The economy has added around 40,000 jobs per month since April, but due to overcounting, the actual number could be closer to a loss of 20,000 jobs per month. As in, they're off by 60,000. They thought we were adding 40,000, but they're thinking from the data that they have, it's actually a loss of 20,000. I think you could say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. So we're in this situation where they're kind of like hinting at the word stagflation without actually saying it. They're like, okay, we have a cooling labor market. Inflation is becoming a little bit more resilient than we thought it would, which is basically the way ChatGPT would say stagflation without actually saying stagflation. It doesn't feel like a hot economy that wants to generate a Phillips curve type of inflation. So they're trying to keep everyone calm, but overall, I'm not saying that this was a perfect FOMC meeting. I would say by the time you weigh everything out, it's going to end up favoring the bulls a bit more, at least in the short to medium term. But when we're getting to the medium to long term, and when I say that, I'm talking about like halfway through 2026 to the end of 2026, I think it's going to be interesting to see, are we actually going to be getting that second rate cut or not? I'm sure months from now, at some point, we're going to be referring back to this conversation. I'll be like, in December, we didn't really know. Are we getting 1 or 2? And at a certain point, we're going to find out if that second one's coming or not. Are they leaning dovish or hawkish? At that point, the decision's probably going to be made with the new Fed chair. So I can already see it in the future, probably maybe 6 to 8 months from now, that we're going to have a bit of drama to get into. All right, very quickly, just drilling down into some individual equities. Oracle reported last night, as I already alluded to at the start of today's show. It did not go well. So we're going to be talking about that, ORCL getting destroyed. And I do want to let you know that Broadcom is reporting after the market closes today. This is very important. Ticker symbol AVGO, aka Avago. It is the second biggest semiconductor play, very much a representative of the quote unquote AI trade. As of right now, the anticipated move from earnings, the implied movement, is 6.5%. So they are very much expecting this thing to get moving. So pay attention to that tonight. And then quickly rewinding to Oracle. Oracle shares plummet 11% in pre-market, dragging down AI stocks. In fact, when we just checked it, it's down even more. It's down 13.5%. Oracle shares tanked on Wednesday after revenue earnings missed analyst expectations. The database software maker extended losses this morning. Other AI-related names fell alongside it. Well, as you can see, we're already getting a bit of a recovery. So coming back to Oracle, that one's still destroyed, currently down 13.5%. But if we look at the others, Avago, it hit an all-time high yesterday. It's only down 1% this morning. Palantir is not really an AI name directly, but it's only down 1.2%. Nvidia is down 1.5%. Apple's actually green. Tesla's down 0.5%. Microsoft's down 0.5%. Meta's down 0.8%. Google's actually green. So Oracle is definitely taking like the brunt of it. AMD is down 1.5%. So across the board, if we just look at SMH, which is the ETF for semiconductors, it's down 0.9%. So yes, Oracle did kind of ruin the party, but it didn't like really ruin it, which is why I'm kind of excited to see what actually plays out today. What in the world is going on? What's not going on? How do people want to position themselves? So basically out of the gate, I'm looking for a recovery, or I'm looking at the potential strength of the recovery. If we were to open right now, we would be opening up at 6864. Remember that, 6864, pretty much actually at the high value from 2 trading sessions ago, which would be what, Tuesday. So Tuesday's high, this is exactly where we're at, where my cursor is. So that means we're pretty much right in the middle of the transition zone. The top of the transition zone is yesterday's closing value. That would be your first target in the bull case. From there, you'd be watching 6,900, which is a key technical psychological gamma level and the high from yesterday. And then past that, we're pretty much then chit-chatting about, are we hitting a new all-time high, which currently the all-time high is 6,920.34. Mark that out on your chart, set an alert, do whatever you need to, but mark that out. And if for some reason the bulls have a big appetite today, from there, I'd be watching 6,930 and 6,950. And up here is where I anticipate it to slow down, because that's where the market finally starts to to run into a bit of positive gamma, which should slow down price action. But of course, that's just the current setup, and you never know what the new positions are going to be. Now, on the flip side of it, if you're feeling like a negative Nancy and a bit bearish, obviously, we're opening up about here. You could watch for initial support, your first bearish target of 6850. That is the bottom of the transition zone. Then we have a little bit of slop between 6840 and 6824. Somewhere in here would be more of your secondary target. After that, you have 6800, key technical level, psychological level, gamma level. And honestly, for me, that's where below it, especially if we close below it, that's where in the short to medium term, I would say things are actually turning bearish. But I do want to remind you, there is a downside gap fill below that at 6776 on the daily chart for SPX. So once again, right here, the latter, that's all your bear case. The former, that's all your bull case. I'm going to let you know my current bias coming into this, just based on price structure, momentum, and options flow, does favor the bull camp. I'm seeing more negative gamma above. I'm seeing vol get crushed. I'm looking for that grindy price action to the upside where we can just kind of grind through the all-time high and maybe make a move to 6930, 6950. But once again, I'm willing to change that. Obviously, we don't even have market open data yet. So of course, I'll be looking at the options flow. I'll be looking at momentum, 5-minute, 10-minute, 30-minute, 4-hour, all bullish. Almost did get cracked last night, but we had a nice recovery. NASDAQ, 5-minute, 10-minute, 30-minute, 4-hour. As of this moment, with about 3.5 minutes to go to market open, clearly favoring the bulls. But let's see what the action actually has in store for us today. So like I said, I am, for today, cautiously bullish. For the remainder of the month, I am comfortably bullish, but I am, I guess, reserving the right to change that opinion and thought process based on any new information coming in. So that's pretty much the prep on the day. If you haven't signed up for the newsletter, mattkohrs.locals.com, it's in the description of the video. My mod will put it in chat. It is free. You've never had to pay for it. You never will. It gives you a breakdown of what happened in the most recent week of trading, cheat sheet for earnings, cheat sheet for all the major macroeconomic events, and then the seasonality of each individual day, which brings me to today. Today's leaning bearish. It's bearish, leaning bearish. And then tomorrow is straight up bearish. So I just wanted to let you know about the seasonality. Today, the bears have a 4% edge, and tomorrow they have a 7% edge. So I'm by no means saying it's like the most absurd stats I've ever seen. I just want to give you the actual stats of the day and kind of the headwinds that the bull camp is running into. So like I said, feel free to sign up for that. It's in the description of the video. You've never had to pay for it. You never will. Comes to your email inbox every single Sunday. Now, the opening bell is brought to you by Apex. They're now running a crazy 90% off deal. Obviously, you could take advantage of it with the code Goonie. It'll be lasting for roughly a week. 90% off all evals. So basically, the all-in cost for the 25, 50, and 100K account is $84. Great deal. And then for the 150 all the way up to the 300, it's $144. Resets are $60. 1 day to pass, and no consistency. Oh, I'm getting knocked out for break even. Kind of. I got knocked out for break even on the minis. What's happening here? Should I just close this? Or is it going to save me? What's market open? Do I risk it with market open? I'm right at break even, so I'm not actually risking any money when I say risking it. Do we think at market open the first movement is going to be a shot to the upside? The ones that I was trading am I even going to make it? Nope. I was going to say, am I even going to make it to market open? I'm not. So out for break even, whatever. I took a shot. It went up. I was looking for 700. It didn't get there. It happens. Like I said, stop at break even. That one didn't cost me any money. I did take one trade earlier today, and unfortunately, even though it went up, I also just got wicked out there. So I had one losing trade, one break even trade right here. Here's the entry. Here's the exit. Pretty much the same value. So I took a shot. Just didn't pay out. It is what it is. I was kind of hoping that it could hold on until 9:30. I needed a whole nother minute and just see maybe right out of the gate if there'd be a pop. And knowing my luck, there probably will be. But hey, it is what it is. As you can see, I'm trading on Apex. I'm trading on Take Profit Trader. I am trading on Funded Futures Network. And the code Goonie will get you the best deal on all of those. And the opening bell is also brought to you by Spot Gamma, this invaluable tool that I use every single day to see what in the world is going on with flow, what I see for the gamma structure, where I can see all the big players structured at. It's a great tool. Like I said, I cannot imagine trading without it. If you want to take advantage of it, well, you can get a pretty big discount of 80% off. It's pinned to the top of chat in the description of the video. And on that note, let's get ready. Let's get ready. Avago reporting right after market closes today. And in general, today's trading session is, I guess, what I'm defining as the day after. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, my goal today is to at least wait the first 10 to 15 minutes, see if we can get an idea of structure and trend. And I suppose it's good that I got out where I did, because if I didn't, I would be another 40 points underwater, which would be an $800 loss. So I'm pretty happy that I handled it the way I handled it. Let me change this data series right here. Nope. Right here. Nope. That's not right. Okay. I accidentally hang on. Well, that's not right. I somehow messed up something. Anyway, I just want the markers only. At least data scale. What did I just do? Oh, shoot. I messed something up. Chart. At least one data. How did I mess something up? What is it even complaining about? Right? Is this it? All right. I think I'm back to where I need to be. We just had a very quick vomit down to VWAP. Very quick vomit down to VWAP. Anyway, I had one losing trade. I tried to play this drop. I tried to play the recovery. It was looking good for a second, and it just hit my risk. I tried to play it again. Same thing, looking good. This time I was at least able to move my stop to break even. So one losing trade, one break even trade. It is what it is. I don't mind the trades at all. Honestly, I don't mind this trade, a bounce off of VWAP. It is a little early from me, but if you took that trade right there, the long at 88, risking 75, I don't mind that. If you took that, I mean, it's a little ballsy. Obviously, things are kind of moving right now, but hey, that means it might be moving in your favor. Like if we get going, we can really get going. You could have been potentially in at 588, and it's not insane to think that you could ride this up another 100 points if some buyers start stepping in here. The only thing I don't necessarily like about it is the time of the day, but you did use this VWAP bounce. You're in at 88. I mean, you could have been in at 86. You're probably now out for break even, but that had a nice 30-point pop in there. That definitely had a nice 30-point pop. I mean, technically, this is even a trigger here. You could go long at 97. You could have risked 87. You're only risking 10 points, small risk. And who knows? Let's say it's 50-50, but if you're wrong, you're only losing 10 points. If you're right, it's just such an outsized return that it becomes a good bet. Like I said, from a risk reward standpoint, I don't mind these longs. The only thing I don't like about it is the time of the day where things are pretty whippy. We're only 3 minutes into the trading session. And I find that when things are whippy, they generally whip against me. But hey, maybe you're just a luckier trader than I am. Like that. That's completely possible. Completely possible. If you want, if you're trying to be a little bit more conservative playing this VWAP bounce, you could do something like a little bit of a trend line breakout here. You could do something like that. Hang on. Something along these lines. So obviously we bounce and we just put in a higher low. Well, technically we just broke that low, but you could watch this low. You could watch this succession of lower highs and see if that breaks. That's not the most insane play I've ever heard of, except my line is pretty messed up. So yeah, looks like we're just really testing VWAP. And before, when I was saying it was whippy, sometimes later in the day when things slow down, you get that one nice test and then it goes. I find that when things are a lot of volumes trading, a lot of craziness is hitting the tape, sometimes it does take multiple attempts. So if you're being super, super strict of like, nope, that's it. Like, well, you already got knocked out there. Technically, this didn't break it. I'm actually kind of surprised they didn't want to push it a little bit. But you just have to probably trade it smaller to give it a little bit more room to breathe. I find when things are a little bit more chaotic, those are the exact times that you have to really, really be on the ball and let things properly breathe. All right. So Open is getting some sort of alert. What happened there is that Open, by the way, I think is an absolutely horrible play. And I'm just waiting for the company to really fall. and it's already starting to break down right here. So it swept that low. It's not a dramatic sell-off right now. In reality, it hasn't been doing anything, but I'm waiting for this thing to plummet below $5. I think it's an absolutely horrible play. It's like a wannabe crappy squeeze play that I just don't think has enough in it. Don't think it has enough in it. All right, here's the 1 minute chart. As you can see, we did open up in the transition zone. Earlier today, we were at 65. For the transition zone, the halfway point is 67. The top of the transition zone is 85. The bottom of the transition zone is 50. So those are some bounds that I'm watching. Obviously, I'm watching 85, which is pretty much the red to green test. I'm watching the breakdown of 50, which could set up a test for somewhere in this region. But we'll see. We'll see. We did sweep VWAP again. A little bit of an overshoot there, which is kind of a good but S&P 500 is holding here. Let's look at the options flow. This should be a little bit more telling for us. All right, so out of the gate, the S&P 500 is actually showing strength, and the Mag 7 is showing weakness. So this is now the fourth day in a row where we've seen that classic mismatch between the S&P 500 and the Mag 7. I find that trading is far easier when they agree. When they're both going in the same direction, it's a pretty telling thing that maybe you should also be trading in that direction. So maybe this is a little bit of a shakeup because we just have 5 minutes worth of data, and maybe from there it's going to get going. No one's touching puts. There's a little bit of call selling on the Mag 7. That's this drop in delta. So maybe it could stabilize and then break in the favor of the S&P 500. Right now, people are buying calls and they're selling puts on the S&P 500. So definitely bullish on the S&P 500, at least for the first 5 to 6 minutes worth of data. I know price isn't moving much, but it's probably because we're seeing kind of the opposite movement in the Mag 7. So maybe, just maybe, if it can get a little bit of structure here, try to recover on VWAP. It's just so much risk. I wouldn't mind trying to go long here. It's just like, if you're wrong, you're getting like kind of seriously hit. Like, I really don't mind this, like, oh, we're trying to switch trend, like we're coming above the EMAs, we're trying to hold VWAP. It's just, if you do it, I mean, it's quite a bit of risk. And I'm not seeing signs of recovery yet in the Mag 7. If I saw the Mag 7 start to curl up, maybe I'd be willing to take that risk, but we actually just hit a low in the Mag 7. So you kind of just have to, well, at least, I mean, do what you want. I'm not your mom. I'm not in control of your trading. But to explain my thought process of, okay, I see some interesting risk reward here. I'm just looking at the Mag 7 flow in this other screen, and like it just keeps getting hit. It's just people are selling calls. So it's not necessarily straight up bearish. People aren't buying puts right now, but it is a lack of bullishness, i.e. selling calls. Now, they might be selling calls to open a position. They might be selling calls to close a position. We don't really know, but all I can tell you is the S&P 500 is showing legit strength, and you could see that in this price action. Is this the breakout? It's just moving so quickly, because remember, every 25 points on a mini is $500. So if the risk is down here at 80, that like it's kind of sizable risk, folks. But on the flip side, that means if you get it right, you can quickly be in money. Quickly be in the money. All right, now we have this new structure to potentially pay attention to. All right, kind of watching that structure. We already saw this structure break out, which is already getting faded back down. What other things? What other structures can we watch out of the gate today? Something like that, maybe. More of an extreme one. Not the worst dip to buy right there at 604. You could have been risking 80. So that's 25 points. You're risking $500, but I mean, it's obviously moving pretty quickly. S&P 500 flow still looks very strong, and the Mag 7 is looking weak. Right here, S&P 500, bottom left, top right, it's ripping, while the Mag 7 is exactly the opposite. It's just a continuation of call selling, a little bit of put buying, but it's a lack of bullishness. And right there, see, this is why I'm saying it's tough to get yourself to chase it when you can see that the big guys are doing the opposite thing. It'd be one thing to buy that dip, if all of a sudden we saw like actual legitimate optimism in the Mag 7, and the SPY is still showing it. So I guess if you want to take long, it's more reasonable to take it on the S&P 500 right here. We got to the halfway mark. I'm still watching 85. That would be a pretty decent recovery. But for me personally, like, it's by definition, if you are going long right here, you're fighting the trend. Granted, you are trading with the trend of the S&P 500, so that's at least one positive thing. The 5-minute on ES, the 10-minute on ES, and the 30-minute on ES are all bullish, so that has some bullish momentum. But once again, this is the S&P 500. The NASDAQ lost it. The NASDAQ lost it. The NASDAQ lost it. So if you're going to be strong, if you want to be long, there's actually an argument that either you have to wait for the Mag 7 to legitimately turn, or if you wanted to play it, you'd be long on the ES, or if you wanted to be bearish, you'd probably be bearish on NQ. But so even though from a price structure standpoint, I fully admit this looked like an interesting long in here, somewhere in this zone. If you took that long from a price structure standpoint, I fully understand. But it was a little bit deceiving because when you look at the options flow, it was telling the complete opposite story, which probably should have like thrown a red flag of like, are you sure you want to do this, brother? For me, I find that I'm much more comfortable and my trades return a lot more when everything is in agreement. So right there, this is your telltale sign that like maybe you just have to wait on the Mag 7. Maybe you have to wait on the NASDAQ because it's just there's a giant lack of bullishness. I wouldn't go so far to call it legit bearish. It's starting to get both. You're seeing calls be sold and now puts are starting to be bought. But if you want to throw in a bullish position, it would be safer, if you will, if you wait for this to stop, because clearly out of the gate, there's some sort of large system that's either creating a new position or it's getting out of an old position, whatever it is. There's a lot of systematic trading going on right now. And the reason I'm calling it systematic is because this is just a perfect linear drop in the delta reading. So it tells me that some big guy is, like I said, either getting into a position or getting out of a position, but they are basically putting a cap as they are. You just have to wait for this to end. Like, that's what you have to do. You just have to wait. While on the flip side, the SPY did pop for the first 8 minutes, and now it's kind of going flat. Avago, I'm watching that because it has earnings today. Oh, the Q's just cracked. Oracle took a hit for the first 3 minutes. It's starting to bounce right now, but it is still down 14% on the day. It is by far the worst performer. Avago's down 3%. Palantir's down 2%. Nvidia's down 3%. Apple's down 0.75%. Tesla's even getting hit. How's Tesla looking? All right. Maybe this is all it needed. Are we done? I'm seeing a little bit of an upward swing. Maybe it was just a 10-minute program. That's a possible. Maybe it was set to whatever, do this movement, and it just was 10 minutes, and maybe that's all it needed. That's completely possible. We're going to see, though. We're going to see. Or is this just a little bit of a fake out relief? But I'm not seeing the Mag 7 trend down as perfectly as it was before, so maybe it only took 10 to 12 minutes to run. Yeah, it looks like the program started at 9:32 and ended at 9:42. So literally it might have just been a 10-minute program for all I know. Getting an alert on something on Apple. Apple is breaking that recent low. Not the biggest fan of that. Tesla, Microsoft, Meta, Google, flat, Oracle, big gap down, trying to recover. Rumble looks like it's putting in a higher low. MSTR isn't doing anything. Avago hit that all-time high yesterday. Downside gap filled to 393.53. Palantir recovering, looking decent. Nvidia, where's SPX at? It's at 65. All right, so as of now, I'm seeing bullishness in the SPY and bearishness in the Qs. So maybe this program's done. I don't know. This is the Mag 7, the combination of the delta flow on Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Those 7 names, 7 of the most influential names in the NASDAQ and in the S&P 500, which is why we track the Mag 7. But you can see it just got hit, and maybe it's over now. Maybe. It's a big maybe. I don't know. But then looking at the S&P 500, it did pop. It's holding in. If anything, now it's starting to go back up. So the SPY is looking good. SPX from here, if it can get above and hold above 68, I'm looking anywhere from 85 to 87. Somewhere in this zone would be my next bullish target after we did this 50% retracement. So next bullish target up here. If we fail here, obviously I'd be watching 6850. But I'm really just watching this. I wouldn't mind throwing on some long positions if the Mag 7 turns. I'm leaning bullish because most of the momentum is bullish. The S&P 500 is very bullish, but in reality, I just need something to align across the board. And right now we're seeing kind of a clear mismatch. The Mag 7's down, the S&P 500 is up. If you look at momentum, bullish, 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 bearish, bearish, bearish. Like, what do you do in that situation? So just kind of waiting, I suppose. For me, I took that one shot earlier today. It was break even. How likely is it that MSTR gets excluded from the index? I mean, how would we put odds on that question? Like, are you looking for like a percentage answer? Maybe a better question is, why would MSTR be in the index? I think that's a better question. IWM is green, like I said yesterday, and this is just a good, I guess, thing to keep in the back of your mind. When capital becomes cheaper, i.e. when the Fed fund rate gets cut, small businesses generally benefit the most because they're generally the most in the need of extra capital to complete their normal business. And sometimes they're not big enough to get influential or, let's say, supportive loan rates. So just in general, when capital itself becomes cheaper, generally small cap does well, and that's why you're seeing the Qs, even though they're down 1%, the Russell's already up 0.6. But I should clarify, the Qs aren't down 1 because of the rate cut. They're down 1 because too many people were betting on Oracle, and they were using that as like representation that the AI trade was like chugging along alive and well. And when too many people are betting way too much money on the exact same thing and they miss on that thing, this is what happens. That is definitely what happens. And that's why we're kind of seeing across the board semiconductors get clocked. I mean, Avago's down 3%, Nvidia's down 3%, AMD's down 3%. So across the board, semiconductor plays are seemingly down 3%. And then Oracle's down the worst, down around 14%. At one point, it was down way worse than that. So it's actually even trying to recover. The Qs are now at the, wow, people are seemingly worried about the SPY. I actually, if you ask me, I thought this was going to break in the way of the SPY. I thought the SPY was the leading one this morning just because of how strong this was. But no, it just switched at 9:45. The Mag 7 is continuing down. The SPY, I thought the Mag 7 was the quote unquote wrong one. I thought the Mag 7 was going to turn up and agree with the SPY, but today we have the S&P 500 is agreeing with the Mag 7. The Mag 7 continuing to puke, and the SPY is now breaking in that favor. 5-minute is testing. 10-minute is still bullish, but potentially testing. And then right here, the 30-minute while across the board, the 5, the 10, and the 30 on NQ are all going down. The 4-hour actually might even be breaking down right here. Wow. Well, this could be a problem. This could be a problem. Well, if you're targeting a level, you could watch 480 on NQ, and then past that, 400, and past that, 380. So it goes 480, 400, 380. Those are some downside targets I'd be looking at on NQ. Wow, I thought this recovery was going to be a full-on recovery. Instead, it was a 50% overshoot, and now we're getting shamacked. We are getting shamacked, and it's just because of all this call selling. Yes, granted, there is some put buying on the Mag 7, but most of what we're seeing in this Delta drop-off is a pretty large amount of call selling, like a considerable amount of call selling. Looking at the S&P 500, it was strong. It was trying to show us what's up and who's who. And then 945 hit and a sell program hit it. You can see right here, someone started aggressively buying puts, like aggressively buying puts. And then that prompted quite a bit of call selling as well. So the S&P 500 Delta is literally nosediving as we speak. Nosediving as we speak. That's nuts. That's some movement, folks. Wow. Yeah, it just all cracked at 9:45. It just all cracked at 9:45. Wow. So the Qs just took out their low from yesterday right there. We just swept all these like 1, 2, 3, 4, pretty much 5 lows. Holy cow. The SPY has not, though. The SPY would have to get down to 681, and we're trading just below 684. So the tech sector is definitely under more pressure, while the Russell's actually green. The Russell almost hit a new all-time high today. It technically hit an all-time high yesterday, and we got really close to it today. Wow, that's getting brutalized. Getting brutalized right there. Well, I am extremely happy that I had my stop at break even, because I had a long position, and my long position was like all the way up here in the top left of the Qs. So I would be an unhappy camper. In fact, dare I say it, I'd probably be getting borderline tilted right now if I just kept that position. So even though I didn't make money on the trade, this is proof to me that I did the right decision, because you never know what the next bar is going to be. And I protected myself with the worst case scenario was break even, and look at how bad the worst case scenario was. I'd be down thousands and thousands of dollars. So yeah, you're not going to be in control of how much money you're really making, but you can be in control of how much money you're willing to lose. And I was willing to lose $0. I kept it there. And had I not had that risk management, I'd probably be getting blown the fuck out right now. All right, we are at that first target I was talking about. Remove. You might be able to see it over here. We're at that first target of 480. Like I said, your downside targets were 480, 400, and then 380. So right here, this shelf, 480, 480, 480, 480. This is where we caught some foundation, where the market kind of caught its footing. So this might be the low. We could easily bounce off of it, because we clearly did in the overnight session. This is roughly 470, 480. I used 480, but you can see what I'm looking at. I'm curious if we're going to bounce out of here, or if it's going to be a fake out bounce and then we plummet all the way down to 400. Don't be surprised that buyers are stepping in here. Classic little overshoot right of all these. I'm sure a lot of people were using these extremes as the risk, so they get blown out. Or people just decide to buy here for whatever reason, like that. This makes complete sense to me. Now, obviously, I have no special prediction of from here, do we actually bounce or not? I could just tell you it does make sense that we're at least putting it in an attempt at a bounce, because, yeah, why would buyers not try to step in at clear levels of support? Now, does it hold is a different story. So if you took that long, yeah, you would just want to be very, very stringent with your risk. You would use the swing low. So if you took the shot at it, maybe you're right, maybe you're wrong. If you're right, great, you ride it all the way back up. If you're wrong, you cut it very quickly. That is, like, we don't have to overcomplicate the game. There's no one on this world that can definitively guarantee to you, are we bouncing or breaking from here? That's not the name of the game. The name of the game is taking a succession of many, many trades with good risk tolerance time and time and time again. That's the name of the game. This was a very reasonable short. Had I been paying attention to it, I might have taken that right here. We popped up. We failed. Short at 84, risking 500. I probably should have taken that. I was actually honestly on the wrong chart here. I wouldn't have minded this at 480, because I could ride it all the way down to 400. I could ride it all the way down to 380. That was probably the trade of the day. Maybe the market's going to be nice to me and give me a second opportunity. Maybe there's going to be another bounce that fails, or maybe I missed the trade of the day and we just completely vomit all the way down. But I kind of wish somewhere in here, somewhere in here, somewhere in here, somewhere in this zone, between 951 and 953. I don't want to chase it to the downside. I want to wait for a little bit of a reprieve. Attempted bounce 1, attempted bounce 2, attempted bounce 3. There was a host of reasons to get in here. If you did in anywhere in this zone, you could already set your stop to break even. And if you're scaling out, my first scale out target would be like 405. My next one would be 400. And my next one would be like 380. That's how I would play it. But alas, I missed it, and obviously I'm not going to chase it 45 points below where I should have been in. LOL. Now Matt is talking about bouncing and breaking. What? Santa dropped a deuce down the chimney. Are you really judging where we're going for the remainder of the year based on the first 30 minutes of trading? If you're extrapolating forward 24 minutes worth of trading to what's going to happen for the remainder of the year, you're just kind of letting the world know that you're not a good trader and you've never done this before. That's a telltale sign of a person who has no idea what they're talking about. If you think 25 minutes worth of trading is somehow indicative of where we're going over the next 3 weeks, that's the silliest thing ever. You can't do that, folks. Remember, use the appropriate time frames for what they actually relate to. It's called anchoring, where you're seeing a little bit of movement, and in our brains we extrapolate that very quickly to mean the overall state of things. And it's just, we've been in days like this where, yeah, the sell-off, I'll be honest, can get really bad and it could keep going. But we've also seen situations like this where there's like a quote unquote like miraculous recovery. It happens. So, and why I bring this up, why I think it's so important, is sometimes you see things like this, and then all of a sudden that becomes your bias that you're unwilling to hang on. I was a little late to that. I was 10 points late, but we're moving real quick today. What I want to do is just get this stop to break even. Fuck it. I'm just going to do it. Free play. Free play. So once again, no risk. I would let it run a little bit more. I'd give it more room if I wasn't already down on the day, but I do want to get back green on the day, which is why I very rapidly move this stop to break even. $380 was my reach, right? $380. Yeah. What is this low? $382. So let's just go to $385. $385, moving the stop. All right. So the stop is now 10 points in my favor. And I'm just going to keep Oh, not yet. I was waiting for this bar to close below. I want it actually to tag 400. I'm being mindful of the fact that, yes, we could easily bounce off of 400. I'll zoom in and kind of show you what I'm talking about. Okay, so I see a lot of buyers at 400. And we're bound. Why is this so slow today? Hang on, I'm having some data issues. All right, I got to be a little bit more careful. We don't want to let this good trade all of a sudden turn bad. So like I said, my stop's already in the money. The question is, how much money can I get out of this? I would love this sweep of 400, the blue horizontal line, and to hit 85. I'm just trying to be mindful of the fact that buyers do step in at these $100 run. Knocked me out. Fuck. I gave it a shot. So I made some money, to clarify. But for some reason, my bookmap data was getting all wonky. I could have re-entered, I suppose. That's a fucking bummer. If I left it at break even, it would have never tagged it. It happens. I got a little freaked out because this wasn't loading, but I guess it just took a second because it all loaded now. But we saw it was a deep red. There was a big pocket of 400. So I was being mindful of the fact that it could easily bounce off of that. So I'm happy I took money. I was down 400. So I was able to get myself, halfway out of that hole. And actually, some of these are now officially green. So I'm watching this. What's the flow looking like? Mag 7's still pretty bad. Flow alert just hit on the SPY. What is the SPY currently? So we didn't hit 380 exactly, but we got into this zone. We're at 40. I'm watching 24 on fuck. I don't want to chase it. If there's a bit of a bounce, I wouldn't mind a bounce back up to 30-ish. I'd take it, but I just can't chase it down because for all I know, buyers step right in here and I'm shorting it at the bottom and I'm just not willing to take that risk. I guess I could have left my stop at break even. I'm happy I took 10 points on that trade. Like I said, it took away half my loss on the day and even got some of these accounts into the green. So it is what it is. It is what it is. All right. You know what I would love is actually this bounce up to maybe even 40 or 50, a failed recovery. 400 is going to put in a fight. You could see it 400, 390, 385. Fuck. It's just not giving me enough to work with. See, look how whippy this is getting. It's tough. You either have to play it smaller and give it more room, or maybe you just have to get lucky. But yeah, you could see things are just going nutty right at this level, and it's no surprise at all. Look at all these sitting pending orders. Look at all, like right here, you could just see and the data is getting a bit weird. Oh, there's a lot right there. Remember, I think whenever there's days that I have like actual success and I feel like I did what I was supposed to do, it's because I was mainly focused on, if it goes wrong, how bad can this get? And am I willing to take that hit? It's not the focus of, oh, wait, but if it goes right and it keeps going this way, like I'm going to make that much money. Granted, if I held on to this one, I'd be up more money than where I got knocked out. I'd actually be looking really good, and I'd probably be looking for this $80 value. But on that one, I never knew that it was going to turn right there. For all I knew, it could have kept going. It got close enough. It bounced off of 403. If there was just a bunch of buyers, it could have gone absolutely nutty. And I was trying to protect myself from that. Granted, it didn't go that way. And if I held, I would be better off. But you don't know that in real time. And even if it goes 9 out of 10 times in your favor, it's that 1 in 10 times that it doesn't that you then get blown out. Remember, to survive this marathon of trading, it's basically, the name of the game is just never take that bad beat. Never take that horrific bad beat, and then you have the chance to survive this game. You can have an infinite amount of amazing winners, but if you have that one horrific loser, the game is over. So I've been, I guess, trying to train myself to always think that way of like, hang on, just always ask yourself the worst case scenario, and are you willing to take that worst case scenario? What was this high? 26, 27. Oh, I was hoping that this was a double toppy type of a thing. We'll see. We'll see. Feels like this is about to knock me out. Yep, it did. Knowing my luck, it's going to do this and then start to fall. I should have been... I'm still very much looking for this test down here of like 83. This is like the major thing I'm kind of watching. But the bounce is a little bit more than I anticipated, and I didn't want to risk it for this because guess what? It could keep going. So I took a shot at it. I gave a realistic shot. It bounced right here, started to fail. I was thinking, okay, maybe it's going to crack 400. Didn't, got out quickly. I don't think trading is exactly this, but I think maybe potentially one helpful way to think about it. Actually, I don't want this one, especially because this might be the 10 a.m. reversal. I don't think trading is like 100% this, but it's not necessarily that far off from a bunch of 50-50 opportunities. So if it's a bunch of 50-50 opportunities, mathematically, that just means keep your losses as small as possible and let your winners go and go and go. There's too many people that think the game of trading is always having a perfect trade and just like going like 30 for 30 trades in a row. That, especially if you're day trading futures, it's not that. It truly, the math distribution of price movement, you're not going for 30 for 30. And if you are, hang on, I'm watching this bounce here at 50. 50, I'm kind of clocking as potentially a key level. If you are going 30 for 30, it most likely means that you're only going for small profits and you're willing to accept large losses. At that point, you can skew it. But once again, depending on how large that large loss is, one hit and the game might be over. I choose to keep, really what I want is my average win size to be greater than my average loss size. And I'm hoping for more than a 50% hit rate. I'm not saying one way is like the only way to approach the market. You just, I guess, watch that video of my positive expected value, and that's all it is. You just have to have positive expected value. How big is this push going to be? I'm wondering if this is going to fail, and if it does, do I want to take that trade? That's a 25-point risk. If I'm wrong, I'm going to be off by 1,000. We're bouncing off of 40. It might bounce into the bottom of the transition zone, maybe 44, anywhere in here. The Mag 7 is still flat. It's not catching a bid. The S&P 500 started to catch a bid at 10:01, kind of giving a little bit of credence to that idea, the 10 a.m. reversal, but let's see if it holds for any actual amount of time. The question here, is this the real reversal, or is this just a dead cat? And obviously time will tell, but we're seeing it was a little bit after it. It was pretty much 10:02, 10:03. The Q started to bounce at 10:02. The SPY started to bounce at 10:03 here. But let's see. Are we just bouncing for a lower high that gets cracked? Or is this actually the low of the day and we just recover this full sell-off? If this just pumps like that, that could be a crazy move. What are we doing? Is this a dead cat? I mean, the Mag 7 it just showed a little bit of a pop right here, but nothing too crazy. The S&P 500 is showing an attempted recovery. I don't know how long it's going to last, though. I could just tell you we're up to 50, and if it starts to break down from there, we might have that next leg lower. We never took out the overnight low. We got really close. We got to 390. The low was actually, what was this, 83. Which is where we had a lot of sitting buy orders. Look at that bounce. This is exactly why you get out. I got in here at 04. I got knocked out at 27. That's a 23-point hit. But see what I mean, where it's all about risk management of like, okay, does that suck to take the hit? Yeah, but guess what? I got out at 27. We're trading at 500 right now. That would be an extra 75 points. That would be an extra, 1.5 thousand hit. So this is what I'm saying is like any good trader I've met that's like had a long career of actual active trading, this is what they do. When they're wrong, they just get out. Like that's it. You just get out because you never know. Of course, like before when I got out on this first one, well, it ended up going a little bit more in my favor. But you can't bet on that because the second trade is a great explanation of, well, actually, if you're of that mindset of like, no, just give it a little bit more room, it might come back in your favor. Yeah, maybe it will. Or maybe it just completely rips your face off. You should always assume that it's going to go this horribly against you rather than magically break in your favor. It's a much safer mindset to just be like, yep, if it takes us out, I'm getting out, and you move on with your life. Yeah, and right here, I'm showing you two examples. One example, if I gave it a little bit more, yeah, I could have made more money. Okay, cool, whatever. In the second example, I did get out, and this is why I get out, because at this point, I would actually be down an extra $2,000. So instead of being down $600, which is completely manageable, one trade I can make back triple that. Well, if I held on to this, I'd now be down an extra 2K, down 2.6. And now all of a sudden, I'm like legitimately in the hole. So in terms of mindset, like that, you got to admit when you're wrong. And there's something going on in the psychology of trading that's like a very, very difficult thing to do. I fully understand it. Like we've all been there. And if you've had no issues with your discipline in trading, congrats, you're basically a robot. You probably have a useful type of autism in the world of trading. That means you're like lights out, and congrats to you. But for the rest of us mere mortals, you just have to take it, and it's not fun. It's obviously not fun, but I deeply believe that's the most difficult part of trading. I deeply believe that is just to stick to exactly like doing what you know you should do. That's the tough part. The tough part isn't learning some mystical, magical, holy grail trading system. Yeah, maybe there's a little bit of learning curve with like options information of like the delta flow and gamma levels, but even that, you can learn it relatively quickly. 1 week to 1 month of like good study, you can learn everything you need to learn to be a successful trader. What takes years to go from all the base knowledge you have to actually being a successful trader is just getting your discipline on point to do that. Like 100%. 100%. And right here, yeah, it rips. So these accounts, I mean, technically they wouldn't have been blown out because I have so much buffer, but that it would have been brutal. I would not be having a good day by any means. And fortunately, I have enough buffer that these things are still like perfectly fine. But geez, I'd be upset. I would not be having a good time. Look at that. So we've already recovered 50%. So this is where basically we opened at 930. That was the high. I pretty much got knocked out right before that. And then we vomited all the way down to here. And we've already bounced 50%. This blue dashed line is the 50% retracement. So it'll be interesting to see which way we break from here. A lot of people, a lot of traders out there watch the 50% retracement. Just because it's your discount or premium level. So I'm curious, are all these buyers unloading it here, or are shorts going to step in? Are shorts going to step in? Maybe we can get an indication of how this will play out by looking at flow. Mag 7 still not doing much. In fact, I'm actually seeing the Mag 7 start to turn. This might be a brutal dead cat. Maybe. I'm watching the Mag 7 flow right here. And then the S&P 500, same thing. Strong bounce for the past 10 minutes, but it's already losing a little bit of its footing. Granted, we might just be making a higher low and it could take off. You don't know. But it is interesting to me. The 5-minute was bullish, then bearish, back to testing. Same thing on the 30-minute. The 30-minute almost broke down on ES. 10-minute, same thing. It tried to break down. They pushed it right back up. Now, the NASDAQ, on the other hand, is legit bearish. It's still bearish on the 5, the 10, and the 30. Even the 4 hours broken down. So if you're looking for a bullish opportunity, you're probably better off on S&P 500 because it's just showing stronger price action. And if you're looking for a bearish opportunity, as of right now, the NASDAQ is showing weaker price action. Just the momentum is clearly getting beat up, probably somewhat related to what in the world happened with Oracle. But right now, I mean, wow, look at the sell-off. We went from 67 down to 33, back up to 60. We're seeing some legit movement. And if you're in here wondering my thoughts on, are we going up or going down? I have no idea. I don't think that's the right question. The right question at any moment in terms of active trading, especially day trading, is there a good risk reward opportunity for you to trade with whatever time frame trend you care about? If you're looking at the trend of the 1 minute, yeah, you should probably be playing it to the upside. If you're looking at the trend of the 10 minute, probably upside, 30 minute, probably upside. But that's what I'm saying. Whatever your time frame is, and there's no good or bad time frame. It's just good or bad for you in your trading. Identify the trend of that time frame and see if you can try to hop onto that trend with minimal risk as it goes a bit in your favor, i.e. as the trend kind of continues. Okay, cool. Try to get your stop to break even and see if that trend just persists and runs and runs and runs. If it reverses and knocks you out for break even, whatever. Or like me, I try to get into the trend. I was looking for that break at 400. Didn't happen, so I took a 1 unit loss, whatever. I didn't let it get out of control. You're not in control of what's about to happen, but you can be in control of how much risk you're willing to take if you are wrong. And in my eyes, that is what a good trader is. A good trader, and I think also in the eyes of all successful traders, they're just really good at risk managers, at risk management for a long period of time. That's what it is. Look at this recovery. Holy shit. Wow. So we sold flat, huge rip. I try to take this breakdown right here, right before 10, and then around 10:02, 10:03, it just broke. So the trend was down. That's why I took the short, because based on this amount of information, I was trading with trend. Guess what? Sometimes trend changes, and that's exactly what happened. You don't know when the trend's going to trade, which is why all roads lead back to risk management. Identify the trend to the best of your ability. Try to play the trend with minimal risk. That's in a nutshell what active trading is. And in a nutshell, that's how I've made from October until now, $400,000. That's what you do. Avago last night, no. I don't know what you're talking about with Avago, but it does report after the market closes today. Just made 2 million space bucks on my last trade. That's pretty sick. 2 million space bucks. That's a lot of space bucks, brother. A lot of space bucks. Almost too many space bucks. All right, 80% off on Spot Gamma. That's this options flow that I'm watching right here, where we're seeing the SPY got hit, recovered, now kind of questionable. The Mag 7 got hit and trying to grind to the upside. Obviously, you get a whole host of tools, 80% off, pinned to the top of chat in the description of the video. And for those of you trying to trade with a Apex account, 90% off. Obviously, code Goonie will get you all these sweet deals pinned to the top. Oh, no, that one's just in the description of the video. Or you could just go to the website and literally put in that code Goonie, Goonie. We'll get you 90% off, which means the evals are only like 16 bucks, 17 bucks. They're dirt cheap. Dirt cheap. Wow. I got knocked out of that short at 427. We're trading at 555. That tells you something. That tells you something about the size of this recovery. That is nuts. Just closed my calls and put credit spreads for 1,200. Sick. What are the EMAs on your EMA cloud? It's like a whole host of them. There's like 5 of them, but it's whatever the, I think it's like the 8, the 13, the 20, and the 50 maybe. Or maybe the last one's a 48. But it's, once again, that's a thing that I find people are trying to be like, oh, no, I need that exact specific one. No, you just need the general gist of them. I don't care if I'm using the 8 versus the 11 versus the 13, the 20 versus the 25. They're not going to be that different. Like if increasing your EMI by like 1 or 2 levels is that's not making you a trader. What you're looking at is just the general flow. Oh, we were going down. Oh, we kind of crossover. Oh, we're kind of generally trending up. You want the general trend. One EMA is not like all of a sudden miraculously better than the others. That's just not how it works. Like, it's not like if you use the 10, you make a bunch of money, but then if you use the 12, you lose a bunch of money. Like, it's just, the market itself is not such a precise mechanism that like slightly changing an EMA changes it. That's not how this game works. I wish it worked that simple, where if you just found the one golden EMA, you'd be perfect. But in reality, there's no one perfect one. It's a confluence of various things coming together. And more important than that is, even if you've never traded with EMAs at all, which, hey, whatever, that's an acceptable thing. Maybe you're just a person who doesn't want to trade with EMAs. More important, it's just risk management. There are people who don't trade with anything. There's no indicators, this or that. It's just like, they take on a certain amount of risk and they look for a certain amount of reward and they move on with their life. That's fine too. EMAs are a helpful measure of momentum. No, they're not. It's just literally an exponential moving average. Momentum as an indicator is a helpful measure of momentum. But that is in itself its own indicator. There is a legit indicator called momentum. Exponential moving average is literally that. It's the exponential function applied to the moving average, most likely the closing value of the most recent X amount of bars. So you're getting an idea of how the closes have compared to each other over the most recent closes, and you're putting more weight on the more recent ones. But to say that that's momentum, that's mathematically inaccurate, because that's not the definition of momentum. Like, momentum, that's how they named them, is momentum. They weren't too creative when it came to the name of that one. I understand what you're saying, though, of like, it's kind of in that realm, because you could probably look at, if you look at the base computation of momentum, the trend, the linear regression of EMA is probably somewhat similar. So I kind of see what you're saying there. So it's not like insanely far off, but if you're looking for like legitimately momentum, just use the indicator called momentum. Interesting. Momentum is how I always thought of it. Like I said, it's in the realm. It's not like so far off. It's not like you're, it's not like you're using something completely unrelated, but like literally, if you want momentum, if you're like, no, I want to trade with momentum, you would literally just go use the indicator called momentum. Tesla showing a higher low, Oracle showing a higher low. Oracle, even though given this sell-off in the NASDAQ till 10, Oracle's actually done better, which is interesting. Tesla trying to recover a bit there. Apple. The SPY almost setting up a perfect cup and handle. Damn. Oh, I keep missing these trades that I want. I keep missing these trades that I want, folks. I guess I have to be patient. There's 2 times I was interested in getting in. I probably should have considered getting in here at 10.11 on this when it was testing the 50% retracement and it started to break out, because I could have had an entry around, I don't know, 35, risking 10. Okay, cool. This one was a little bit more chasey, this pullback here, but somewhere in the realm of 50, risking maybe 30. That was another one. And maybe I'm like kicking myself a bit now because I'm seeing that it would have greatly gone in my favor. But I do feel like I missed an opportunity in here and an opportunity in here. That's a bummer. That's a bummer. But hey, there's always more opportunity in the market. I just don't want to get myself into that mindset of chasing, because I feel like for quite a bit of my trading career, I would feel like I miss an opportunity and then it would go in my favor, and then I would feel like I'd be owed that money, and then I would in one way or another chase it. So now at a higher risk level, I'd be playing even with, I guess, like more contracts, more leverage, or more something. So I not only have higher risk in terms of the distance to my risk point, but then I'd be playing it larger. So I'm trying to not do that right now, because I feel that itch of like, fuck, like, you kind of feel like you're owed the money, because I was looking at this long around 30, 35, and we're already up to 600. So yeah, it's a fucking bummer. But maybe, just maybe, I should be happy, because there is old Matt who would have been still holding this short from 404, and I'd be currently down 200 points. I'd be down literally $4,000 per contract. So maybe I should be happy that I've improved to the level of just admitting when I'm wrong on one trade, and maybe I could work on, I don't know, that urge to chase on the other. So maybe I should focus on that, because 3 months ago, 4 months ago, I would be the person still holding this short. I would very much be holding this short at 404, and I would currently be down in excess of $4,000 per account times 15 accounts. That would be a shitload of money. What percentage of his money is actually in the market with Apex? Whatever you put on your credit card bill. I'd have to look at my individual statements to get all these accounts. But I'm greatly up on it, because I've already been, on this batch of accounts, I've already been paid out $60,000 between November and now. So, I mean, I don't know, the fees for these accounts in total is less than 3, and I've been paid out 60. So in terms of ROI, like a huge amount. I still struggle with holding like that. I got into a bad habit of using my extra capital to martingale, and I've gotten away with that too many times. Martingale mathematically works if you have enough money, but you have to have, like, it's somewhat a function of your base unit size. But most people, when they try to martingale, their first bet size, their first unit size is way too big. If you're attempting to martingale and you can't feasibly get to potentially 8+ iterations, mathematically, eventually you're going to get clocked. So martingale, I don't trade that way. I think there's other issues with it. But the average person attempting to trade the martingale, they make the misstep of starting their initial bet size too large. Well done, Matt. 60K is a great year. I mean, that's just now. I got 240,000 earlier this year. So my Apex payouts this calendar year are in excess of 300K. So I'm stoked about the 60K, but in reality, I thought this was actually bad for me. The numbers on my account suggest I've been doing well this year, but I don't think I did. I think I could have done a lot better. I actually feel fortunate with how much I'm up across the board, because I feel like if a couple things had broken not in my favor, I could actually be severely down this year. So it almost, I don't know, it doesn't necessarily like feel like I absolutely crushed it. Wow, the SPY, look at that. Look at that. The numbers on the paper feel good, but in terms of like I think there were a lot of times where I took on outsized risk and I got lucky that it broke in my favor, which to me isn't necessarily the sign of a good trader. It's the sign of a lucky trader. And eventually everyone's luck runs out. So I don't necessarily feel like holistically, I'm very happy with whatever. I made multiple six figures profit trading this year. So I feel good about that. Like I feel, hey, that maybe, just maybe I can figure out this trading thing. But I think the year of 2026, there's a whole list of things that I want to like work on and improve on. How much did you start with? That's not how SIM-to-funded trading works. With SIM-to-funded trading, you, for as low as $84, they might, if you pass all their tests and whatnot, you might get $50,000 of capital. So really your risk is whatever you put on your credit card bill with respect to what's going on over here. Oh, brother. Oh. Hang on. Okay, so the point of control is down here at 600. A lot of people trying to unload it at this recent high of 27. The 50% retracement is 22. The high is 54. Oh, I would love a dip to 90. I would love a dip to 80. I would love a dip to somewhere in here. I just don't want to chase it, but I want to play the trend. The SPY is looking strong. All right, that's not actually my profit target. I'm just kind of setting it up there. I am watching the initial balance high, which technically isn't in for the next 3 minutes. But I'm watching 54, it seems. Is that right? Is that correct? The high is what? 50. So it's exactly 50, actually. So this initial balance is a little bit off because I'm on a tick chart instead of a minute chart, but I'm kind of watching this level here. I want to see what happens at that level. Obviously, my risk is this recent swing low at 1023. And then if it breaks and goes, I'm happy to take it at 700, but I have a feeling we're not going to hit that so easily. If we do, I'm not going to be complaining. But really, my goal is to hit 50 and move my stop to break even. That's my real goal. AI reports suggest that about 12.76% of the total supply of Apex is currently circulating in the market. What the fuck are you talking about? The total supply of Apex circulating in the market? Alabama Cajun, I don't think you fully understand what Apex is, because that statement like legitimately makes no sense. Like whatsoever. That makes no sense. Where is the super trend? The super trend is what, 95? I could use that. Put it right below the super trend at 93. Do I want to give it this room? I'm thinking about it a little bit just because can it bounce off of 600, but I have a sneaky suspicion. Fuck. Is it just going to wick me out? Are buyers coming in at 600? No, they're here at 85. Yeah, this is going to knock me out. Maybe I'll get lucky at point of control, but I saw buyers flashing here at 85. Oh, do I want to go with them? It's taking on a little bit more risk than I want, but it's not the worst in the world. Once again, I'm seeing buyers flash. They're moving it down, though. Maybe I could get a little bit lucky. Where are those buyers? Oh, I don't like this. They're moving down. I'm watching these guys right here. I might have to close this position. I'm watching these guys. $6.10. We got to 81. Oh, they're pulling them. $94. Oh, shit. Not necessarily in love with this. I wanted, when we got to this zone, I was looking for a better bounce, but now it's actually getting a little bit sparse in here. So some are getting filled, some are getting pulled. Just that buy side liquidity is not turning up as strong as I wanted it to. With a bounce back to POC, which happens to be 600, I might have a bit of a shot. So basically, if it can take out 594, I'll be feeling somewhat decent. I'm looking for POC up here at 600. I want to see how the market reacts to that. That dip scared me for a second, but the buyers are, we did just hit 1032. I'm either about to do something pretty smart or pretty stupid. Fuck. I was trying to buy that recovery, but it instantly got smacked. I was praying for a push through the POC. I added on another contract, lowered my average by 12 points. Lowered my average by 15 points. So I'm taking on more risk, but I'm increasing the chances of me being able to get out for break even on this. Well, it is what it is. Now it's just a game of risk management. Right here, we sold, we try to recover. That's where I tagged that long. I was telling you about 94. So I added one in. I'm worried that they might want to tag VWAP. That's my concern. But instead of having this fill at 25, which was a bit chasey, it's now at 10. So I was able to improve my average. Oh, 94. If we can hit 610, I'm going to move this one to break even. Come on. Come on. Take out 600. So if we go to 610, I'm moving the stop on the second entry to break even. So then it's a freebie play. Freebie play. That's what I'm all about. My mantra on this is, can I get in for a free play? Take out 600, pop it. What is this high? This high is technically 610.50. So if we take out this high at 610.50, fuck, it's getting rejected at 600. That's not good. A lot of sellers just showed up at 600. A lot of sellers just showed up at 600. Not good. Shit. Yeah, I just got clocked on one of these. Fuck. I dumped one because if it does fall, I just don't want to fall with it that far. I'm watching VWAP bounce here at 55. Just got clocked on one of these. That is not good. But I'm watching this level right here. Kimmel Design, I'm another month older. Nice. Bullish, 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 bullish. Tried to go bullish, got smacked. Tried to go bullish, got smacked. I really need this above 610. 610 is obviously a key level for me. And then so is 628. Mag 7, try to get going. We had a nice recovery from 10 to 1025, giving a little bit back, but not the end of the world. The SPY is showing it bullish, though, which is why I'm willing to hold one of these contracts. Which is why I'm willing to hold one. What is this showing us? 580. Are we actually cracking this? Oh, or maybe today's not just my day. Maybe the vol's too high. Maybe I just want to cut this all here and move on with my life. This is a dip a little bit larger than I wanted, but I kind of understand it. I understand the idea of the VWAP test, which we're within 10 points of. I probably should have cut bait. We'll see. All right, we're at VWAP right here. I'm curious if we're going to bounce off of it. What is that low? 33. This, I don't know what I'm doing today, but I don't feel like I'm doing well. Oh, let's see if we can get a little bit lucky with a VWAP bounce. A little bit lucky. What's that? 72. Let's see what the flow is looking like. Actually took a hit. SPX. SPX never hit 85. We're right at this 50 EMA. Watching for the VWAP reaction. Hmm. All right, I'm putting in a protection order. I added one here, obviously, to lower my average. Oh, all right, so I just want to mark out my actual entries so I can manage them independently. We'll see. We'll see. It's only 2 years, but been a fan since AMC. Shout out, man. Let's see if I could actually do something fucking smart today. All right, so I did get in here. I already dropped that contract. I got in here, still in that contract, got in here. Dude, right when it's looking kind of good, dude. I don't know. Today, I'm just not catching it. Is this about to plummet? I might get lucky with a perfect higher low off of VWAP, but I've seen these too many times where it likes to overshoot it and then it goes, so it'll be just enough to knock me out. And I have to take it because the other option is it actually plummets, and then like the opposite of before, I'm just completely destroyed. Dude, what a fucking pain in the ass today has been. What a pain in the ass. All right, I'm completely closing positions. Okay, I got out of everything just so I don't hold on to a loser that's going to completely destroy me. Let's get rid of this. Let's get rid of this. Let's get rid of this. Wow. I still have a ton of buffer. I'm just not happy with what I'm doing. That was honestly, I don't mind this trade at all because it would have seemed like a genius trade if we bounce off of VWAP and then rip. I don't mind it. I honestly don't. I guess, no, I wouldn't even move the stop to break even because we didn't hit 95. We didn't hit 600. So I can't even judge it on that, saying like, oh, I could have updated the risk. This, if I just show you this right here, we pop. If I show you this right here, we rip, we pull back a decent chunk, we come to VWAP. We've all seen it before where there's a huge VWAP bounce. Like we go up, test, pop, pull back, retest, and then go. I got the entry right off the bounce. And it just didn't go this time. I truly don't mind that trade. With respect to how I've been trading today, obviously, because it didn't go my way, it made the pain like that much worse. But I don't mind it. I got out when I should have got out, and honestly, could just keep going from here. It could sell. Knowing my luck, it's going to bounce back. I mean, we could probably look back at the end of today and be like, wow, Matt got out at the worst point, and we just ripped. And if he held it, which is kind of how that very, very first trade went. But just on the off chance that this is actually turning around and the trend is changing, I just don't want to be involved. I just don't want to be involved. But I do like this trade. If it presents itself again today, tomorrow, the next day, I'm going to take it because in aggregate, it's a net winning trade. But that doesn't mean it's a net winning trade every single time. I guess maybe the criticism I could have had on myself is getting a little bit earlier, maybe on this first attempt right here at 57 instead of getting the fill at 72, because that would have just saved me some points. But regardless, I would have been knocked out at 45. So it was always, I guess, destined to be a losing trade. I just wasn't on the right side of it. It was, maybe I could have minimized it a little bit, but I mean, they had a lot of things going for it. The S&P 500 pump, pull back right in its cloud. I could easily envision this little breakout here. I was looking for that. I tried to play the first round of the breakout, just didn't happen. Yeah, sometimes it just doesn't go in your favor, which is why perpetually the name of this game is just risk management. It sucks right here. I waited for this pullback. I was looking for that bounce. Unfortunately, it just got clocked. So as many times as I could show you examples of it getting clocked, like real time, there's all the times where, oh no, it pulled back. That was the higher low and it goes. You don't know. And so if you're attempting to trade in a way where you're like trying to figure out what that next one's going to be, it's just not that. And unfortunately, because of the whippiness of this today, it's been very much whipping me out. I mean, look at that pump. We didn't take out the high. That was another thing, to get this close to the high. I was like, oh, we're at least going to test it. So I was waiting for some form of a pullback to get in. The only trade I actually don't like today, which I know is crazy to say because these are like a lot of trades that I had, was this one right here. This 1027 entry. There, it was a bit chasey. I was in at 25. Probably should have been in at 11. Probably should have been in at 11. Like, there's two reasons. In at 11 here, in at 11 here. I felt like I was chasing that to the tune of 14 points. So I could have been out for only a loss of 10 points on that one. And then maybe I would have played this a bit better. But this one, there was a better entry for sure. There was without a doubt a better entry. So this is the only trade of the day that I don't really like. This one, I had good reason. This one, I had good reason. They just didn't go my way. Look at that. And it's going to come back. Fuck me, dude. It happens. It happens. This is literally, as of the day, this is the only one I don't like. All the other trades I like, they just, unfortunately, variance was not on my side. Lady Luck was not on my side. So I can't be that bummed out about that. Double down? Nah. No. Not yet, at least. Not quite the right time. I can't believe it. Yeah, it did that overshoot thing where it wicks it. You see this so commonly where it puts in that low, a lot of people try to protect it, and then it takes it out, and then that's the time it actually goes. So right here, we overshot this low of 46 by a good chunk to 22 points, and then boom, right back up. Now the question is, I mean, as we're dancing around at VWAP, who's actually in control here, the Bulls or the Bears? Who's actually in control? The 1 minute is trying to decide. It was bearish, then went bullish, now back to potentially bearish, but this could be a little fake out. This could be an overshoot. Like, we swept this low. We almost swept this low at 10.11. We did sweep this low at 10.16. Is it just a little sweep and the buyers are coming in, they're buying it on discount? Or is this actually a switch? 5 minutes bullish, 10 minutes bullish, 30 minutes bullish, 4 hours bullish. 5 minutes bearish, 10 minutes bearish, 30 minute is bearish. So we're seeing completely different ES, S&P 500, bullish, bullish, bullish. NASDAQ, bearish, bearish, bearish. So it's just telling two completely different stories. It is interesting if it can recover above 77 on NQ. And then obviously on ES, if we take out 58, that could be a bit problematic. Even if it takes out, basically if it takes out 60, it's a problem. I'm watching this 50 EMA over here. No, we might be smacking this here. How's the flow looking? Mag 7 flow is back to being. So we had that beautiful recovery. It just didn't last. It lasted for about 25 minutes and it's getting smashed. Getting smashed. Wow. Dude, you think they're going to send this all the way back down? After bouncing it 220 points plus, they bounced it 230 points. NQ bounced 230 points. You think they're going to send this? That would be kind of nuts to see. This bounce on NQ. Wow. That was $5 on the Qs. It was 230 points. You think they're going to just send her all the way back down? We're getting some... This is nuts. We're getting some serious moves, some serious size. I guess you could watch the 5 and the 10 minute on ES, but clearly breaking down. I was attempting to see, I saw this overshoot. I saw the pullback. I was thinking it would pull back into the cloud, and I was trying to play this pop somewhere in here around 10:30, 10:35. It just so happened that it didn't. In reality, that one long I took would have been probably the best short of the day, and I would have been up 130 points on it already. Wow. Yeah, it's just the AI trade is not, look at the Mag 7 still getting undone, and now the SPY's even kind of getting cracked. The SPY tried to get us going for about 30 minutes there, but the Mag 7 just never followed suit. and the NASDAQ tried to get going, never followed suit. It did for a little bit, but golly. And right here, before, when I was willing to get out, okay, did I take a loss? Yes. But think about how much worse it would be now. I'd be down another 50 points on 2 contracts. I'd be down another 2K. So this is, even though it was a loss, I classify it as a quote unquote good loss. I got out where I should have gotten out. And this is how bad it could have been. Yes, of course, you could always argue, but wait, it might look good. It might recover. Yeah, it might. But what about this situation? What about the situation where it actually just doesn't and you're on the wrong side of the trend and it trends against you for the rest of the day? So I would be down an additional 2K and counting had I not gotten out where I was supposed to get out. So this is pretty much the second time today where sometimes you just have to admit when you're wrong. You just have to get out and admit when you're wrong. Wow, this is just getting clocked. What's the 1 minute looking like? Holy shit. I guess what goes up must come down today. Is that the name of the game? What goes up must come down? Golly. Damn, imagine if I did just hold on to this short at 400. Like, what if I just degenerately held this entire time? That would be something. It'd be a miraculous recovery. I'm not saying, to be clear, that would have been smart by any means, but it would have been crazy. It would have been absolutely crazy if I just held that one play and said, nah, it's coming back. I'd be sweating, but damn, it would have worked out, or seemingly would have worked out. This is just puking. I suppose if for some reason you wanted to be bearish, which I think it would have been tough to be bearish at that time, you did have a short here and probably more of a short here. You could have been a bit chasey at 1048, but probably in here, this VWAP retest, you could have been short at 54 and maybe you were either risking 63 or 85. So when we puked below, if you're like, for some reason, if you just had a bearish bias, you could have shorted at VWAP. And obviously you would have been up almost 100 points, 80 points right now. So I feel like that's not the most insane trade I've ever heard of. But the sell-off itself was kind of a dagger down. To this point, there really hasn't been much of a rebound. If there is a rebound, maybe the rejection off of 500, which is kind of funny because we were just talking about the support at 600, which didn't hold. It's just we're moving 100 points like it's nothing. We're moving 100 points like it's nothing. I'm curious. I'm curious. I want to see a bigger bounce here. I want to see this tag at 500. I want to see what happens there. I think this will be telling to see. No one's really at 500. All right, I took a one contract position just in case it gets rejected at 500. Once again, do I know if it will or it won't? Hey, I get a 50-50 opportunity. Same thing with VWAP when you're at a key level. Does it get rejected or not? I don't know. Your guess is as good as mine. What I do know is if I can keep my risk in control, which now it's actually already being tested again, if I could keep my risk in control and we do puke to the intraday low, it's such an outsized return that it's worth it. It's just, can I take advantage of that potential movement with reasonable risk? We'll find out. We will definitely be finding out. I'd prefer a clear rejection at 500. I'm using what I saw this wick over here. What is this one? Yeah, 17.75. Stop market. Threw in a second one. This one's even tighter. So I'm treating them as two independent positions. Actually, I kind of wish do I want it at 512? I kind of like 512. I'm using this 50 EMA. What is the 524? Is this just going to climb against me? It might. Man, I'm just not. I feel like I'm keeping things in control today. I feel like I'm not spiraling out, like chasing, like even this, instead of chasing the whole thing down, I waited and saw a red. And even on all these, like I'm waiting for a bit of weakness. I feel like I'm being patient with it. It's just not going the way I thought it would at all. But I feel like I have good reasoning. We're starting to unwind. We got rejected at VWAP. I took the play at 500. It just happens to be fucking destroying me. Yes, we got knocked out of one already. I feel like this is just not my day for whatever reason, man. That one got knocked out too. I feel like I'm patient. I've been waiting for it to I'm trying to really not chase. I'm trying to trade with the trend. If we're defining the trend, I just feel like every single time I look at it, the trend is potentially legitimately switching. Right here, trending down, down, down. Okay, I wait for the first actual bounce. I didn't want to go before because we were above VWAP. Puke, puke, puke. We start to bounce. We're at a key level. I just feel like I cannot get on the fucking right side of this for the life of me today. I cannot get on the right side of this at all. Wow. Fascinating. Really. I mean, even this, I waited, it even snapped that low. I was like, okay, we're going to get a little bit of a bounce. Reasonable to expect a bounce. And then I'm looking for this the puke to the intraday low. We swept those lows. We swept those lows. We swept those lows. I guess, however I'm approaching the market and my feelings of when to get in, I'm been proven to be horrifically fucking wrong today. Horrifically fucking wrong. About to retest VWAP. Yeah, I'm kind of paying attention to that. Kind of watching VWAP. I'm watching this area between 540 and 551, but god damn, dude, I just cannot, like I said, get on the right size of it. Matt, I like to size up and trade faster when I'm in days like you're having. Well, I don't, because that's when things go off the rails for me. I'm fortunate enough to have a huge amount of buffer that taking the loss on any day sucks, but I have enough buffer that as much as this is painful, I can make it back. My accounts aren't in trouble by any means. I mean, I have still $25,000 worth of buffer. So of course you never want any day to be a losing day. You would be insane to say, yeah, I like losing money. It's just, I'm astounded that even this, we went up. I tried to buy the pullbacks. Nope. Kept going. Try to buy the pullbacks. Nope. Kept going. Okay. And then you finally admit it's going down. So you try to go short. Nope. Those are the times we're switching. I cannot get on the right side of variance today. I feel like the time that my time frame of how long I'm waiting for a trend to establish, it feels like I'm just horrifically wrong today. It feels like the time I'm waiting is the perfect time for the trend to actually switch. So it's almost this weird situation in the time I'm waiting for trend confirmation of okay, that's the new trend, is actually just the perfect time for the trend to be yeah, we're not doing that anymore. It is fucking nuts, honestly. What's the flow? Mag 7's still bad, but S&P 500 try to bounce. 5 minute, 10 minute, 30 minute bullish, 5 minute, 10 minute, 30 minute bearish. Jesus Christ, dude. The market has no idea which side it wants to be on. It has absolutely no idea what side it wants to be on today. The SPY is showing decent strength, while the Nasdaq is showing decent weakness. Like, even look at that bounce. I am just getting chopped alive. All right, here's the 1 minute on NQ is coming right up to its. So it was all bearish, then bullish, pulls back. Do I want to? I was literally, oddly, how funny is that? That I was about to say, do I want to take this short? And the second I say that, it just pops 20 points like it was nothing. That's kind of funny. Literally the second that I'm like, oh, maybe I should take this potential failure. That just shows you the state that I'm at today. The second I do it, I mean, we could probably see it better on the 15-second right there. This bar, it went from 26 up to 55. It just arbitrarily bounced 25 points for probably an options trade. Little VWAP rejection. I don't know, man. I don't know about this one. Holy shit. Today we're just moving and grooving. As soon as I shorted, dude, I'm right there with you. I looked at it too. I was like, oh, maybe I should take this. And boom, it just pops like crazy. Fascinating. This is crazy. Absolutely fucking nuts. Yeah, look at that. That 1 minute bar. Something had to happen in options. Yeah, see, it got a little jagged there. Someone was doing something. I don't know. That's the VWAP retest. Is it going to pass, though, or is it going to fail? Do they actually want it up there? It's for those of people who just, if you had a pending short order at VWAP, you could just move your stop to break even, and as long as it doesn't retest, you're looking golden. As long as it doesn't retest, you're looking golden. Man, I cannot get over how horrifically I'm on the wrong side of variance today. I mean, I'm at the point that even if I could pull back a third or half of this, I'd be stoked. If I could somehow get out of this, like even a portion of getting out of this hole, and I'd be happy. But I'm almost getting to the point that I'm like kind of hesitant of like what the fuck to do. Jesus. This isn't telling us anything of utility. I guess we definitely can see that there's a lot of negative gamma. We're all over this fucking map. Is this going to fail? Right here, the NQ's going up. SPY is having an issue at that 68 level. If it fails 64, maybe it wants to come back down to 50, 52. But that's a big if. It's like awkwardly in the middle right now. Wow, I'm just kind of disgusted with how today has gone. Not happy with it in the slightest. Oh, yeah, I think there's a couple things that I could have done better, of course, but I don't know. The way I'm looking at it, it seems like today I was pretty destined to get chopped the fuck up. Like I said, I think there was various ways that maybe I could have minimized some of the pain today, of course. I'm not saying that, but I don't like looking at this. I'm not really sure what I could have done to be green on the day. Like in reality. Of course, in hindsight, we're all phenomenal fucking traders. But like in real time, it feels like I was destined to get chopped the fuck up today. I really do. And who knows, maybe I'll catch the most magical, mystical recovery of the afternoon. I don't know, but gee, like it's just these, I wait for the pump, I wait for a pullback. Nope, not for me. I wait for the dump, I wait for the pump, try to short it. Nope, it's like it just keeps switching, like legitimately switching here. Oh, fuck me, dude. And I guess sometimes that's trading. Just that's why I guess I always say the key is keep your sizing in check, because shit can go wrong, and unfortunately it could go wrong often. This technically is a higher low on the 10-minute. Taking out 77 is interesting. We are just maybe losing a battle at VWAP. Oh, who the fuck knows? Who knows? Oracle's actually chilling. SPY, lower highs, higher lows. Qs, lower highs, higher lows. The Qs are just settled at the low from yesterday. The SPY's at the high from 2 days ago, just below that 30-minute Orbo. I guess we're losing here. It's getting... The hell does this mean? Are we getting smacked at VWAP? What the fuck's the trend? Bullish, 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 bearish, bearish, bearish. Holy guacamole, Batman. It's not even the fun type of guacamole either. Even in hindsight, I'm a terrible trader. Yeah, on a day like today, I agree with you. I agree. Today is just not destined to be my day. We tried to hit VWAP twice. That little overshoot rejection. I guess if you were bearish for whatever reason, you could have taken it. I don't know why you would have necessarily had a bearish bias, but if you're just short at 50, congrats, you're already up 25 points. Fuck, man. Holy guacamole. There's no trend today. Well, there's been nice portions of a trend, but no consistent trend. We've had a dramatic sell-off, a dramatic pop, a dramatic sell-off. Like, it's all over the fucking map. And unfortunately, we don't necessarily know who's dominant. You have the S&P 500 that's trying to go up, but then you have the Nasdaq that's trying to go down. Maybe this was the telltale sign that I should have done nothing, seeing the clear mismatch. Maybe that's the main lesson I could take from today. Maybe the argument was to literally do nothing, because 5-minute, 10-minute, 30-minute bullish, 5-minute, 10-minute, 30-minute bearish. Maybe I should have just waited for at least the 10 minutes on the two to agree. Maybe that's the major takeaway. I don't know, man. MSTR got some sort of alert. MSTR breaking down, not looking good over there. What the fuck is this? Bearish, clearly bullish, clearly bearish, bullish recovery, questionable. From here, is it a higher low and we keep ripping, or are we vomiting all the way back down to 380? The world may never know. It may never know. All right, it is past that time, and I feel like the longer I stay on, I'm going to end up making stupid decisions, so I should probably call it a day. Shout out to Spot Gamma, shout out to Apex. Use that link for Spot Gamma, and then if you're interested in Apex, of course, you could use that code Goonie. I appreciate the good vibes. I think I kind of notice it in myself when I might be making some bad decisions, so I myself maybe I just need to call it a day and just stop it, stop the pain where it currently is. So that's what I have for you. I hope you're doing better than me. We'll be posting an update video later on today and then streaming once again tomorrow. I hope you survive the day. Remember, the name of the game is perpetually just what is your risk? Survive with your risk. Don't be crazy with it. That's what I have for you. Best of luck. Peace.